Hey, oh, the camera. I apologize for the quality of the camera. I couldn't use my phone for the live, so I'm using my laptop, and this is not giving clarity. Give me 1 second. All right. I think that's the best it's going to be. Hello, guys. I have a dilemma. We have a dilemma, and it has to do with the rental property. The initial plan was to keep this rental property for life. It is an asset that I would just pass on to my children because, I love the idea of having an asset outside the stock market. But something didn't come up, but I'm starting to think that may not be the best way to use our money. That may not be the best move in terms of finances and growing wealth. So I need you guys' help. I'm going to give you guys the numbers, the figures, and I actually do want your input. This is the one time. This isn't for engagement. I truly, truly want your input. And I'm actually not expecting to see much people on here. I'm actually not even expecting to see anyone right now because I didn't announce I was going live. So whenever you watch this, I really, really do want your input. So leave me a comment as to what you think is the best move and the best option. It is my first time going live, so I'm not sure if I should be looking here or looking at the camera. It is my first time, and like I said, I apologize. It's not as bright as I want it to be. I'm in the office. I have a lot of light, but I guess the webcam is just not working out, and I couldn't use my phone. And I had planned on going live today, so this is it. I'm all stuffed up. I have a cold. I'm worried about my nose running on this thing. But this was a plan for today, and I'm doing it. I'm going to do it. Okay, so like I said, we have a rental property that was our primary residence, and we were making good money on it. We have positive rental income every single month, but we now have this current primary residence, right? And we have a higher mortgage on it. And now I'm wondering, are we doing right by money? Are we actually making the right decision financially? Or are we blinded? And by we, I mean my husband and I, this is what we're mulling over. So we are now wondering, are we making the right decision, or are we blinded by the fact that we just want to have another asset outside stock market that we don't realize you're actually paying more than what you're getting, right? And that's where I need your input to let me know after you hear the numbers what you think you should do. And hold on, after I give you the numbers, there are two caveats that I need you to put in mind because that's what makes our decision hard. All right, so here are the numbers. The rental property, which was our primary residence, has a 3% mortgage interest rate. So it's very cheap. It currently has a balance, let's just say over $100,000. I'm being mindful of what I can and cannot say in terms of privacy. So let's just say it has a balance of over 100. What does it matter? It has a balance of 150,000, right? But it has a 3% interest rate. We have a net rental income of, on a good month, $1,000. And based on our experience, it's been how many years of renting now? I think we've gone over 2 years of renting. Honestly, we've only had to do repairs a couple times on anything. It's not a brand new home, but when people talk about rental properties, they always talk about repairs. We honestly have only had to do repairs a couple. It hasn't really cost us a whole lot of money for repairs. So on average, you're looking at, let's say, 900 every single month, but in a good month, 1,900 to $1,000 every single month in positive rental income, which means after paying the mortgage, after paying insurance, taxes, interest, principal, interest, taxes, insurance, we net 900 to 1,000 every single month. That's not chicken chicken. That's a lot of money, right? So, and it has an equity of about 280,000 equity in the home, because when we lived in the property, my philosophy has always been to sell, not sell off, to pay off the mortgage. I really love the idea of paying off the mortgage, so I owe no one and I can live in my house with ramen and candle and be fine. So we were really trying to pay down the mortgage before we left, and then properties have also appreciated ridiculously over the last, what, 5 years. So we have an equity on there of about 280K. So if we sell this property, we stand to make about 180,000 profit if we sell it today. Okay. Now here are the numbers for the primary residence, and I'm not sure if anyone has joined yet. Oh, hi! Hi, Daryl. How are you? I wasn't expecting anyone to join in because I didn't announce it. It's live. I'm going live for the first time. Didn't announce. 3 people. Oh, I'm nervous now. I'm nervous. All right, let's keep going so I don't lose it because first time live is different from talking to a camera. All right, primary residence. We currently have a mortgage of 6% on it. It has a loan balance of over 300,000. This is where I'm not going to give you specific because privacy and all, but we have a balance of over 300,000. That's a lot of money. And then, and another thing here with a mortgage of 6%, your mortgage payment is not small. It's a lot of payment. And property tax in Nebraska is high. Nebraska is known for high rate property tax, which is a lot, right? And that will come in handy when you're making a decision on what to do. So pretty much where that comes in handy is even if we got our mortgage payment, i.e. principal and interest low, because there's high property tax, your mortgage payment is still going to be high. Capiche? All right, so here are the options. We could keep things as is, like we planned on doing. We have the rental property is bringing us 1,000 every single month, and we have our mortgage. Thank God, hubby's employed. We're not worried about layoffs. We can afford to make our mortgage payments. But we have 2 properties with more balances on there. To me, we're debt heavy. Net worth is great. Net worth, we're in the positive because these properties have good values and we don't owe what it's worth. So net worth is great. But the part that is starting to concern me is the fact that over $300,000 in balance and on a mortgage is a lot, right? And right now, when I look at paying that down, it will take forever. Right? When I had the other property, when the other property was our primary residence, I could foresee paying it down. It felt like, we could do this. It's an elephant. We're taking a bite at a time. Sorry if you're vegetarian, but we can take a bite at a time and we'll eat this thing. Not a good example, but with this one, it feels like we're talking a massive. And my kids are getting older. My priority now is retirement and the kids' tuition, growing money. So the thought of throwing every single dime into this over $300,000 mortgage balance just seems like a lot, and it feels like it would take forever. So here I am with 2 mortgages. When I say mortgage, I'm talking about the loan balance with 2 major loans. We're not paying down the rental property, right? That's not a big deal because the interest is only 3%. But the primary residence, we're also not paying it down because it's going to take forever. And it's like, is this the smart way to use money rather than trying to grow our retirement and kids' tuition and all that, right? So we can leave things as is, but then we are very debt heavy. And the amount of interest we're paying on this property, and that's a major thing for me, is 6% interest is a lot. 6% interest on over 300,000, it's a lot. And so I feel as though leaving things as is not a wise move or a smart way to use the money. All right. So then the other option then is, should we sell the rental property, take that money out of the rental property and pay down the primary residence? The benefit or the pro of going that route is, well, one, we've paid down on this major mortgage of over 300,000, right? It's not going to pay it all off. We would still have at least over 100,000 left to pay, right? So it wouldn't pay it off. It wouldn't eliminate mortgage payment. We would still have, even if we were able to pay it off, well, okay, it wouldn't pay it off. We would still have over 100,000 left on it. But at least with that amount left over, 100 and something thousand left over, we could recast the mortgage. This is something new I've learned. Recast the mortgage is the opposite of refinancing. When you refinance, you refinance into a lower rate. Most of the time, you're going for a lower rate, you pay for all those fees. But with a recast, you keep your rate as is. You're just stretching the new balance over a longer period of time. So it's almost like you stretch the new balance, you're starting over from year one on a 30-year plan. You're starting over from year one, but you're keeping the interest as is. So it reduces your monthly payment because you've stretched how long you have to pay the balance. So you get the benefit of refi in the sense that you restart the clock, but your interest doesn't change, which makes it attractive for banks. So that's an option. We sell the rental, take the equity from the rental, pay down our primary residence, and even though we still owe on it, we can recast it, thereby reducing how much it costs us every single month, reducing our mortgage payment. And with our mortgage payment reduced, now we have more monthly cash flow to do whatever we want to do. Now, remember, I said the property tax in Nebraska is high. So when I say we have more cash flow, it's not like massive, but it's better than when you have a balance of 300 and something thousand. If we follow that route, we lose the $1,000 every month in positive rental income, which is not small change. This is a 3% mortgage. Everyone knows. Who knows when else we can get that, right? You're losing a property that is in a good area, is in a high demand area, and is competitively priced. Let me mention that. When I say we're making good money on the rental, it's not because we're horrible, greedy landlords. It's competitively priced for that area. It's a very in demand area for families. So our rental price is right on. We're not taking advantage of anything. What is working for us is the fact that housing market right now is crazy, and so rents are high. So, and even if rents are not high, because the interest rate is low and we have really paid down on that loan, our mortgage is low, so we're able to make good profit. So if we sell it, we're losing this asset outside of the stock market. To me, that's a major loss because everything cannot be in the stock market, right? You can't have your retirement, children's education, every other extra growth. I'm just not comfortable with everything going into the stock market. So I know even if we sell down the road, maybe 5 years from now, 7 years from now, I would still want to get back into real estate because to me, it's a tangible asset to have. And that if that happens, I'm going back in at what 6% interest rate, seven. It doesn't make sense to let go of 3% to get 7% or 6%. That's the struggle, right? Let me see here. Daryl, you said the renter will pay it down, and you get to write off expenses on rent. Right, which is what we've been doing this whole time. The renters have been paying the mortgage, and we've been getting that benefit of the net income, and of course, we write off expenses on our taxes. But our struggle, like I said, is we have a 6% mortgage here, you know, and when you do the math, are we actually making money or are we losing money because we're paying this high interest on over 300,000? That's the struggle. All right, let me continue. I'll read your comment. All right, so something else to keep in mind here is when you sell a property, if you haven't lived in that property over the last 5 years, you pay capital gains on it. All right, let me explain it this way. When you sell a property, there's this room for you to avoid paying taxes on your profit. Um, the rule is you have to have occupied that property for 24 months within the last 5 years. The 24 months does not have to be consecutive, but you have to have occupied that property as your primary residence within the last for 24 months within the last 5 years before you sold it. So the problem with this now is we have to make our decision soon because we're about to hit that timeline. If we sell the property and we haven't occupied it for at least 24 months in the last 5 years, we would be paying taxes on that equity that we're trying to get out of the house. So this isn't a situation of, well, you know what, you don't have to make a decision now, give it another 2 years. We don't have 2 years. We're about to get to hit that timeline where it would no longer be considered as, I don't even know what it's considered as, but we're about to hit that part where we have to pay taxes on it if we don't sell. If we sell anytime, let me see, if we sell anytime from late next year, then we're going to have to pay taxes on that profit. So if we are not planning on holding on to this property long term, i.e., over 10 years from now, and we don't sell now, we're shooting ourselves in the foot. Because if you don't sell now and you end up selling 2 years from now, you lose money because we're having to pay taxes on the profit. And we're talking a lot of money. We're talking a profit of at least 180,000. That's a lot of money. So if you're going to sell 2 years from now, you might as well sell now when you don't have to pay taxes on it. So that's something to keep in mind. So I don't have the option of just wait it out and and chill. And that's part of the reason why we're rethinking things now is, are we being wise with trying to hold on to assets and trying to hold on to, we have a rental property that we've always wanted? Or is it wiser to take this equity out since we are lucky to live at a time when the property has appreciated within a short period of time, something people wait decades for? Is it wiser for us to take that money out now? All right, another caveat, so you keep this in mind when you're giving your advice on what we should do. Would it change your decision, whatever decision you have, or whatever option you think we should take? Would it change your decision if we could refinance our primary residence to say 4%? Say next year, the economy, who knows, or in 2 years, and let's just say within the next 5 years, whatever happens to the economy and maybe rates get decreased and we're able to refinance to 4%. Would that change your advice on what we should do? Because I know a big thing for me is the amount of interest we're paying. When you get a mortgage, your first 10 years, your mortgage payment is mostly going towards interest payment. And when I think about the interest payment we're making on this house that has over 300,000 balance and has an interest of 6%, that's a lot of money. Now, when we bought the house, we bought the house with our eyes open. We can afford it. Don't get me wrong, we can afford it. We're not in trouble financially. We're just trying to make sure we're maximizing or optimizing our finances, making the right decision, right? So when I think of how much interest we're paying on this house, if we're able to refinance to say 4%, would you still say sell the rental, or would you say hold on and just try to make more money? Or if you want us to keep both properties and we're able to refinance to 4%, will that change your mind? This is where I need you guys' input. I need you to let me know. And if you watch this after the live, still let me know in the comment section, because hubby and I are really paying attention. We we want to know the right way to go. All right, let me read the comments. All right, so Daryl, I'm sorry, should I call you Daryl or Fire with Dr. Ninja Turtle? I'm not sure if you want to go by your first name. My bad. I'm sorry. I'm glad you mentioned recasting, save up the rental income, and use it to recast the primary. You will be happy to hold on to the rental if you can. Hmm, that's that's actually not a bad idea. Well, we would have to save up for at least 2 years, right? So 2 years would be, all things being equal, no repairs needed. We're looking at what, about maybe 24K, because I wouldn't recast by just paying down the mortgage by 12,000, because we just moved into this house, right? So this is really our year one, right? So if I pay down the balance by just 12,000, it really wouldn't make much of a difference if I recast after year one. It would make a difference if we recast after paying down, say, 50K, right? And that rental income, what we use it now for is a kid's education, the 5 to 9 and all that. So if I have to save that to recast, then I lose the money going into 5 to 9 and all that. So it's a good idea, but it will take a long time. it would take at least 2, 3 years of saving that money. And in those 2, 3 years, I'm not using that money for the 529. And I'm also not, um, yeah, pretty much I'm not using that money for the 529. I have to hold on. And I'm also paying the interest on over 300K for those 3 years. And those 3 years is interest heavy. I'm paying mostly interest. So yeah, but that's a good point. That's a good point. So yeah, that's it's a tough decision. Let me tell you, I really, 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 really love the idea of having something outside the stock market. And something else I have considered is, well, maybe since the rental property has a lower balance, maybe have the rental income go towards paying down that mortgage and throwing every extra money to that rental property so it's now zero balance and all that rental income can come to us, not just the net. But now, I guess maybe being older, I'm in my 40s now, 60 looks very close. Kids are getting older, education. I just can't justify doing that. And I also can't justify, even though that loan balance is lower, I just can't justify paying off 3% when I have 6%. Like I don't even have the appetite. Back when we first lived there as a primary residence, that was my focus. I was like, we are paying this amount. I am paying up my mortgage. But now with our interest rates now higher than 3%, and at the time when we got 3%, we thought that was high. I seriously was like, this is messed up. People have 2% and I'm dealing with 3%. But now that we have 6%, it's like 3% can sit still. All right, you said if you add the 1,000 rental cash flow as a principal payment, it lowers the actual interest. Oh, that's a good point. Wait. How does that lower the actual interest payment? Over time, it would lower. So you're saying if we take the 1K that we get from the rental property and make additional payments to our primary residence mortgage, over time, we end up paying less in interest. True, true, true. And I've thought of that. And that's also part of my concern is, are we being wise in doing that? Because that money could go into our retirement or the girls' education fund, you know? But yeah, that's another option, is using that rental income to start paying this down. I think you're right. It comes down to us choosing what our priority is. And that's why this is hard, because you're right. If our priority is not paying this high interest, then we should take the rental income and use that to pay down this mortgage so that over time we're not paying as much interest. Yeah, yeah. It's just the fear of, oh man, that money could be growing. It could be growing. It could be growing in the 529, in our investment and whatnot. And why not take this equity that you have, and use that to pay down the interest? This equity you have, at what point would you take this equity out of the house? Do you want to wait another 10 years? And who knows, maybe the housing market will come down, because I personally don't think the housing market is going to keep going up. My husband thinks otherwise. I personally feel like the amount of growth the housing market has had in terms of home values, the amount of growth the home values have had over the last 5 years, there's no way it would keep going that high. It would keep growing. This just, well, I personally just don't see how. Like, how would people be able to afford homes if the value keeps going up? So I'm anticipating that within the next 5 years, there has to be some kind of crash. There has to be. And so, isn't it wise to get out now so that we can get the equity out? And then when there's a crash, we'll buy back in, right? So that's another option. We get out and try to save up as much and just hold on. And when there's a crash, we buy into the market. Yes, I know we've been expecting a crash for quite some time now, and it hasn't happened. But I'm thinking between now and 7 years, a crash has to happen. The value can't just keep going up, right? So on one hand, another option is just get that money out now, because once that property value goes down, who knows when it will come back up and how long it will take. So let's get that equity out now, hold on, start saving up, and then when the next crash, we can buy a newer property that will end up not having as much repairs because this house is also getting older. The rental property is also getting older. And before you know it, perhaps we'll start having more repairs because thank God we've been blessed to not have any major repairs that cost a lot of money, right? Let's see. Rental properties are a long-term process. Slow and steady wins the race. Yeah, it takes a long time to build wealth in real estate. Yes, yes. It is future growth. You can take an equity loan on the rental in the future. Time in the market does not. Facts, facts, facts. Yeah, I'm with you on that one. And that has always been my mindset is that this rental property is a long-term thing. Is and I watch what's his name? Gary, he's British. Gary Economics, I think that's and he's said the same thing, assets. You want to own assets. And he actually specifically said not to sell your home because assets are only going to get more expensive. And I agree with him because wealth inequality is growing. It's going to get more and more expensive to buy assets. I agree with him. And so my mindset has always been this is long term. We're owning this property. Heck, pass it on to the kids, right? Let them be the first generation to get that wealth passed on. And then I just started thinking, are we being wise? Because people take out the equity. In the future, if I take out a home equity line of credit, because that's the only way to take out equity from the house, now I'm paying interest on my money. Because when you take out a line of credit against the equity of the home, there's an interest. So I'm paying interest on my money. Is that wise? Or shouldn't you rather take it out and make use of that money? And if we don't sell it now and we go get outside of that 5 year mark where you do not have to pay interest, then we break even, I think, 14 years, i.e., if you sell it any earlier than 14 years, then you've lost money. Your rental will buy you another rental in the future. Right. Right. You can take that on a loan. Right. That was the plan. That was a plan that when we do so, because um, uh, I'm not sure if you sell a rental outside of that 5 year mark. I'm not sure. I think you don't pay interest on it if you buy another property. I think. Don't quote me on it. And with everything I've said here, I'm not a financial professional. There's always that disclaimer. Use the information as you may. This isn't an advice. So yeah, that was a plan. Is eventually we sell this old house after it's old and used, and then use that money to buy a new rental property. So there's always rental income, even for retirement. It's good to have another source of income coming in, right? Use the loan to buy a rental, then Daryl said use the loan to buy a rental. So equity, take a line of credit against the equity on this home. You use that loan to buy a rental, and then the renters will pay for the loan. True. That's true. That's true. See, that's why I'm doing this live. That's why I'm bringing this to you guys because my husband and I, this has been our conversation for the last 3 days. We've been thinking about every aspect. We've been trying to think about the pros and cons. And then I decided, you know what? I'll bring it to you all with your expertise, with your smarts, because I think you was kind. You was what was the word? You was kind, you was special, you was smart. So you all can give me your input because everyone has all this experiences, expertise, wisdom, and I'm very open to suggestions and advice on this so we can actually make the right decision because it will really hurt to get rid of to sell something and then regret it. If whatever decision we make, I want to make sure I've considered every single option so that when I make that decision, there are no regrets, right? Because I know I have considered every single pro and con and then made my decision accordingly. Let's see. The 1031 exchange, right? When you sell a property and use that money to buy another property. Yeah, I think that's what it's called, the 1031 exchange. Yeah. Your family is going to be wealthy when girl. And I said, girl, trust me. Thank God we're in a position where we can do that. And I feel like that's our responsibility, right? As parents, is to make sure we do right financially. Our responsibility is to make sure we set our kids up right. And then, there's a part in the Bible, not to get spiritual, but there's a part in the Bible where it talks about you do work hard and make all this money, but then the next generation can squander it. And so, what's the point, right? So, my part is just making sure I do my part and making sure I set my kids up right. And then, whatever they do with it, that's their headache. But then I know I give you whatever it is I gave you what you needed to get going. And then it's up to you, right? They don't have to, God willing, I don't have to rely on them for my retirement. I don't have to become a burden to them. And at the same time, they can also fly. I give them their wings to fly, right? That would be amazing. Can you imagine? They are adults, and then they have this property giving them income every single month. I mean, and then it can pass on to their kids. I think it's amazing. I love that idea. All right, I'm going to have to sign out. 31 minutes. Oh my goodness. I'm so proud of myself. I'm so proud of myself because I was so nervous about doing this. My kids were nervous for me. I told them I'm going live, stay quiet, no noise. They're all watching their iPads. I bribed them with their iPads. So I can't stay too long. I really, really appreciate you signing in. I see at the time there were 4 people, and even those who will watch it afterwards. I really, really appreciate you all watching this. I really appreciate your input, and please still give me your input when you watch this in the comment section. Thank you so much, Daryl. Thank you so much. I wasn't even expecting anyone to be there. We go. Now it's showing 4 people. I wasn't even expecting anyone, so I really, really appreciate you all. We did it. We went live for the first for the first time. It's not the best picture. I don't know why it's dark. I'm not sure why. You'll have 10 rentals when you retire. Amen. My dream though is to have it where it's not a risk to me. I don't want to own all these rentals and I'm owing so much on them that something happens and I lose all those properties, right? I don't want a situation where, say, the economy goes down for 6 months, 8 months, and I can't make my payment and all my hard work is down the drain because now all the properties have been foreclosed on. I think that's what happens when you come of age during the 2008 crashes. The crash is that these things happen. So I want a situation where at least things are paid off, not debt. I don't want to pass on debt to my kids, but more so for my husband and I. We don't want to be debt heavy. I want a situation where worst case scenario, I owe no man. I can live in my house, even if that means I can't afford light or food. I can live in my house with candles and eat ramen. I can live on $100 a month. That's what I want. Oh, thank you. Thank you so much. We're trying. We're trying. We're trying to. I think it's only in today's day and age of tech, financial information is readily available for all of us. I think it's irresponsible to not do well financially, to not be, well, what I mean, do well financially, I mean to not be responsible financially. We have free information online. Everything is accessible. So it really doesn't make sense for us not to be responsible financially. All right. Thank you all so much. I'm so proud of myself right now. You don't even know. I'm so proud. Thank you all so much for watching. Feel free to comment and let me know if you have any other ideas on things we should discuss. I'm open to doing that. If you want us to do more live, I will be doing more live because it saves me time of not editing. And from what I've heard, YouTube likes when you go live. So my goal is to really get this channel going. This channel needs to pay me money. It needs to start paying me money. Do it like I did conservatively. Yeah, yeah, that's a goal. My girls are cheering me on. Well, all right, I have to sign up. Thank you all so much. I will see you in the next video. Thanks, Daryl. I'll see you. Check your email. I sent you an email. I don't know if you sent it. All right, I'll check my email too after this, see if you've replied. All right, thank you so much. I will see you in the next video. Bye. Oh, did that